This is Adrian Larson, President of Pathlight Investors, here with your Pathlight Insight. Now, we've been getting a lot of questions given the fact that markets are at all-time highs. The Dow Jones Industrial Average has crossed 20,000. About investing when there are new highs and kind of the fear that new highs will then lead to ultimately stock declines and not wanting to be involved with that. So we figured we'd take a moment, kind of get away from all the political rhetoric that's being thrown around right now and kind of the discussion going out there about the presidency, and really talk about and hone in on why stocks make new highs and ultimately why it's still okay to invest while stocks are making new highs. Really, when you look at things, the Dow Jones Industrial Average making its new high, crossing the 20,000 threshold. In 2017, 98% of the gain in the Dow Jones Industrial Average is related to 4 names, okay? Just 4, and it's because it's a price-weighted index. Apple alone has accounted for 1/3 of the gain in 2017. So the other 26 companies, while contributing, really are being pulled by those larger price, larger capitalization names. So you have to look at the internals when you look at these new highs being made. The S&P 500 just crossed over the $20 trillion market cap value. It's the first time it's ever done that before. But really, when you look at kind of the underlying why stocks are moving higher, it's because of earnings. As earnings grow, so should the stock market value. And we've come out of what was a 4-quarter earnings recession in the 3rd quarter of 2016. We've continued that growth in 2017, or in the 4th quarter of 2016, as earnings growth has accelerated to roughly 8%. Now, with roughly 3/4 of the companies of the S&P 500 reporting. We've got 67% of those companies beating on the earnings front. We've got 55% beating on the revenue front. So the fundamentals of these companies are solid, and we're looking at earnings growth estimates in 2017 in the double-digit range, so 10 to 12%. So it makes sense that stocks would move higher, regardless of what's going on in this political theater. One other thing that we want to talk about was the fact that as indexes make new highs, right? 80% of the time, 1 year after that index makes a new high, the index is even higher. So in terms of getting involved when indexes are making new highs, it doesn't necessarily pay to wait for that pullback and be fearful of that high. So if you want to talk about anything, please give us a call. We'll be here to answer any questions about this. Take care.